3 weeks, this whole thing came down, right? So panic buying was over, and as a consequence, we did see a sort of a contraction of demand. What you see over here is the impact of COVID on freight activity. As you can see, the US is somewhat similar to India in the sense that there are very different regions, and these regions have different problems. If you look at, for example, New Jersey and New York, you can see a dramatic reduction in freight activity, and quite frankly, the problem was probably the most pronounced in the United States in that particular area. New England is another area that was quite affected. And then the Midwest was affected both with Detroit and Chicago being hotbeds. So what this means is the response to the virus has regional consequences, which we see then in a different amount of activity across the country. Now, historically, GDP has been a very strong driver of truck tonnage and de facto then also sales volumes. And what we have seen is that the GDP projections for the US are quite dire. We've seen a significant contraction in the first quarter. We're looking at anywhere between, say, 30 to 50% contraction in the second quarter, and then slowly we are going to sort of hopefully climb out of it. Hopefully there's no second wave, and then return to growth at the end of this year and then going into 2021. Right, so that's the situation that we're dealing with, and it's no different in other parts of the world as well. Looking at history, what have we seen? We basically, in the last 20 years, had two major crises. One was the dot-com crisis in 2000, 2001, 2002. And as you can see, this dashed line on the screen over here is basically replenishment or replacement demand. That is the number of trucks that need to be sold in a given year to make sure that we keep sort of old trucks going out of the system, and we basically then replenish at the same level with new trucks. And in 2000, we clearly see that there was a dramatic underperformance as far as replenishment is concerned. We actually took trucks out of the system. The overall average lifetime of the truck increased, and the same happened in basically 2009 and 2010 in the aftermath of the great financial crisis. In terms of looking at what this means to basically one sales and the other one is the average age of assets, you can see that the bump up during the 2001 dot-com crisis was very minor. We basically had an average increase of the fleet, age of the fleet, by about 0.6 years, and it didn't really stick, right? Basically came down very quickly. Now, after the 2009 or the great financial crisis, we did see a dramatic increase in the average age of trucks to by 1.2 years, and this time it stuck. And the reason is simply that the overall technology and the quality of the trucks had become so good that it really didn't make sense to change trucks that often. Maintenance costs didn't basically go out of a reasonable level, and that really changed fleet behavior. We see a little reduction around 14, 15, probably linked to new efficiencies, new technologies that got into trucks that actually brought down TCO, and that's then the reason to buy. But overall, a significantly higher average age compared to what we've seen in the past. In this crisis, we do think that we'll see again an increase in average truck age, and based on our models, we do see sort of a roughly truck age or a fleet age of about 10 years. This has then significant impact on new truck sales, and new truck sales in our base scenario would be clearly below replacement level at 120,000, 180,000, and in the more severe contraction scenario would be around 85 and 155,000 trucks. So very, very substantial. The collapse in the US truck market is very, very pronounced. And I'm talking about HDTs, or the Class 8 vehicles that we normally talk about over here. And that's due to the fact that we come from very high levels. We had full order books. We had a tremendous backlog going into 2018, 2019. This backlog is now coming down, and we're seeing a collapse from 330,000 to about 120,000, which is what we expect, potentially 85,000. And clearly, while previously the downturn was manageable, people had already prepared themselves. They had idle plans that weren't needed any longer. This kind of transition is something that tests the limits of any organization, as I'm sure you can easily relate to fighting the same kind of fight in your various companies. MDTs, meaning the Class 4, 5, 6, 7 vehicles, are also impacted, will see a significant contraction by about 50%. However, here the correlation with GDP is less pronounced, which is why we don't see the same kind of severe economics in the MDT segment that we see in the HD. Let me just switch now quickly to off-highway equipment. The way we look at off-highway equipment is agricultural machinery. These are the small tractors under 100 horsepower. The large machinery are the more than 100 horsepower tractors, which you typically use in broadacre farming, the combines. And then in construction equipment, we have, again, compact and heavy. Compact being excavators and loaders, and heavy being then the large dozers, excavators, and loaders. And then on the material handling side, we look at warehouse lift trucks and rough terrain lift trucks. Now, the good news is that in the United States, life was actually quite pleasant for most of the segments. If you look at construction equipment, that grew at a CAGR of 9% after the great financial crisis, both in the compact and heavy segments. So great, right? Small ag machinery grew at 6%, driven predominantly by some applications in construction, some applications in basically fruit and vegetable farming, and also by the gentleman farmer, meaning somebody who has enough money, buys himself maybe 15 acres of land, and then decides that they want to farm for themselves, grow their own food, or maybe produce wine or olive oil, what have you, right? Rough terrain trucks and lift trucks, again, also very, very aggressive growth over the last decade. Only large ag machinery being depressed. And the reason for that is that farmers' incomes in the United States have been depressed for quite some time, starting 15, 16, 17. Right, so that's a challenge. Putting the various segments into perspective, what we see is that while the early 2000s recession overall had some impact on passenger cars, somewhat sort of negligible impact on trucks, the financial crisis was much more severe. In those two crises, in ag, we saw an increase in small ag machinery in the 2001 crisis. Really didn't affect the gentleman farmer that much, maybe even increased the number of people who left their dot-coms, took the money and built up some little farm somewhere. In the large financial crisis, at that point, the normal gentleman farmer was affected, volumes went down. However, large ag did not go down. Farmer incomes were reasonably intact, and they invested in equipment. On the construction side, in both cases, heavy contraction. Material handling, in both cases, heavy contraction. Right? And while the dynamics of these segments in various countries will change, I think the overall tendency across the board will be the same. In terms of the drivers that we have agricultural machinery, depending on real GDP and gross farm income for the two segments, Construction equipment in the US depends on housing starts and residential construction. And then the material handling piece depends on industrial production. So those are the main drivers that we use for our simulation. And each driver obviously is a sort of combination of various factors that feed into this driver. What we see is a significant contraction in 2020 in terms of small ag by -22, large ag going down by -16, and then rising quite steeply. The assumption over here is that any kind of bailout or support money by government is not going to go for large ag into capex, meaning into equipment, but will probably be used to run the farms. And it is, at least we assume, conceivable that farmers will try to push the age of their equipment even further. They haven't bought for some time, so there's definitely a backlog that needs to be serviced. But in these kind of uncertain times, probably this is not going to happen this year, but then will happen next year. Construction equipment contracting by 20 to 30%, and then warehouse lifts, really, and rough terrain lifts being heavily hit with a contraction of 50 to 70%. So again, a challenging environment, right? What this basically goes to show is every country across the globe currently has some severe challenges, and we'll see the same now as we move towards India. Now, if we look at India, we did have de facto already quite some challenges for quite some time, right? GDP has been on the downward slope for a number of quarters, and you could argue even still, or since 2017, we've had an issue. We had a small bump in between, but it's been challenging for a number of years. And the reasons for that are many. One is we had issues around commercial credit slowdown. In terms of shadow banking, lending has collapsed, and we had some various NPAs. We had issues with NBFCs. Overall, we had weak domestic demand. We had volatile fuel prices and economic sentiment. Typically in India, especially when I was with Mercedes-Benz, the glass was always half full. I think now people are sort of seeing that the glass may also be half empty, and that has an impact on consumption. And clearly, global factors also had an impact on India in the sense that, for example, the trade war between the US and China did not really lead to a major push of the Indian economy. Normally, you would have said, okay, listen, let's try to position ourselves as an alternative to China. And I think so far, other countries such as Thailand, Vietnam have been more successful. Now there's some news that this may change. There's been a lot of land that's been promised to companies that are moving out of China. I think the US government is clearly interested in taking out the 100 billion FDI that the US has in China out of the country, moving it somewhere else. In part, also moving it back because clearly you want to have more supply close to your demand centers. But I think that could be an opportunity for India. We would have to see whether the country can really leverage this opportunity. Now, if you look at the predictions for the Indian GDP, those are actually, relatively frustrating in the sense that the ranges clearly point only in one direction, and that's downward. We may see, according to the IMF, a 1.9% reduction growth in India, which is really way too little for a country that has still a population that's growing very rapidly. And then if you look down the line, the predictions go even into a -1%. So clearly, India has a very challenging year in FY21 and also going forward into FY22. If we see our projections, we have basically two scenarios that we're looking at. I apologize for the action title. That's a little bit out of line. But our understanding or our hope is to have a GDP growth between 1.2 to 2.5%. That basically would allow us to look at a situation where in the short scenario, the positive scenario, we have consumer sentiments that are low in Q2, but then recover. We have production stoppage till mid-May, and then basically we prepare to ramp up, and then we get a brisk ramp up. We have credit availability that's being improved, and we have also basically supply chain bottlenecks and restrictions for movement that will then slowly open up in Q3. So that's our positive scenario. And what this would mean is that basically, I'll come to the projection in a little bit. Overall, what we've seen is the auto sector in India has been severely distressed. We had a historic contraction in overall sales already by 18% in FY20. And clearly, this is a combination of what we discussed about earlier, relatively low demand in rural areas, consumer sentiment, access to finance, overall volatility in the environment, low GDP growth, and then obviously the impact of COVID at the fag end of FY20. And what we see over here is just the sales comparing FY20 actual versus FY19. And what we can see is that we had basically starting October started to see a certain amount of recovery in sales. We were clearly below previous years till then, but then in October we were at least at FY19 level, and then obviously COVID hit in March, and that led to a dramatic reduction and fall in sales for commercial vehicles, passenger vehicles, and two-wheelers. Going forward, if we have the short scenario, we see basically a reduction by about 20% in FY21 for two-wheelers, 14% for passenger vehicles, and 14% for commercial vehicles. In the longer scenario, where we basically lift restrictions by the end of July 2020, we will see a reduction in two-wheelers by about a third, passenger cars and commercial vehicles by about a fifth. Right, so clearly a dramatic reduction, and that comes on top of a situation where previously already sales weren't great. Right, so clearly this is a challenge for the Indian automotive industry. There is a significant recovery projected in FY22, but looking at the supply chains, looking at the people working in the automotive industry, especially at the lower tier levels of the supply chain, clearly lots of the workers have been affected quite badly, and definitely need support from de facto the government to make sure that they are reasonably well taken care of. I'm not sure if I should go into the details, but I think this is just sort of the details of the projection, in terms of how does our demand look and how is our quarterly sales forecast. The document will be made available, so I encourage you to have a look and have a detailed discussion with us on these various numbers. In terms of the aftermarket, I think the good news over here is that the size will be relatively resilient to lost car sales. This is now more for the car park, meaning the passenger vehicle situation, but even true in commercial vehicles as well. As we will increase the average age of vehicles, obviously maintenance cost, aftermarket expense will go up, and that overall will be relatively resilient, which is a little bit of a ray of light in the situation that we're currently seeing in India. Yeah. Now, let me move on in the interest of time to how to tackle the crisis. I think there are basically two areas. One is the challenge of how do we manage survival in the immediate term, right? So the immediate responsibility is to ensure the health of staff and identify vulnerabilities. What can I do if I'm, for example, a critical industry and I have to continue operating? What do I need to do in order to make sure that my people are safe? That's obviously number one. Second has been to ramp down and shut down the operations, make sure that you basically can turn off the switch and not leave anything lying around. Third is really to looking, and that's been extremely critical, to look at short-term liquidity measures. How can I make sure that I have the money to fund my operations during this very critical time? So what we've seen is basically various activities of companies across the board, not only in the automotive industry, in terms of ensuring access to credit lines, if possible, in terms of not paying dividends, in terms of trying to reducing salaries. Obviously, layoffs have been very important, especially in the United States, where about 30 million people are currently out of a job. So it's an unemployment rate that inches towards 20%, very significant. And then there is the whole question of securing funding in government aid. Is there something that the government is providing for us that we can get access to and hopefully leverage to make sure that we can also keep our employees as much as possible tied to our organization, right? That's been the effort of every government. Governments want people to stay employed. They want people to stay linked to the company so that when things restart, I'm actually able to get into operations with the people that used to work for me as quickly as possible. Prepare for an efficient restart, and we'll talk about that in a second. And I think then there is the whole area of emerging stronger by improving performance and capitalizing on strategic opportunities. Now, what does this mean? It basically means that we have companies that entered the crisis with really good balance sheets. They had cash on hand. And clearly, in that kind of environment, a company can now go and really think, okay, listen, what is the capability that I need? What is it that I need to do in order to strengthen my competitive position going forward? Can I basically take over a competitor, for example? Or even if I look at new technologies, if it's autonomous, electrification, connected vehicles, are there capabilities that I don't have? Are there startups that are running out of funding? And can I now attract either talent or buy IP on the cheap? So I think that's extremely important, and that definitely has an impact on the industry going forward, in the sense that we will see a certain amount of consolidation. We will see potentially OEM consolidation, or OEMs taking over suppliers or working closely with suppliers to make sure that they don't go under, and I'll talk about that in a second. But the second thing that we have is also a consolidation in the supply chain, where financially strong tier one suppliers can play a relevant role, and even tier two suppliers can play a relevant role. One thing that's important for OEMs in all of this is also a supplier watchtower. This is very similar to what we did in the 2008-2009 crisis. We need to understand what is happening with the key suppliers, which suppliers need to be supported. Do I do an equity infusion? Do I sort of help them find some money and some funding? And which are the suppliers that are not mission critical? And those are the ones that I won't support, because as I have only limited cash, I can't do everything myself. I can do something by working with the rest of the industry, but obviously I have to also be aware that one OEM cannot solve the problems of the total supply chain. So those are some of the immediate points, and then we have to ramp up. And the ramp up is going to be different than anything else that the industry has seen before. right? We have a certain amount of uncertainty in our ramp up. We don't know when are we going to restart operations. What is the impact on consumer and customer volumes? I haven't sort of gone across or through this slide, but obviously with this kind of a sort of shock to the system, it is unclear when consumers will be confident enough to buy equipment, to invest in a two-wheeler, to invest into passenger cars, to continue spending and consuming, and obviously that will also have an impact on commercial vehicles. There is a question around program prioritization. We'll talk about that in a second. The other area is that this shutdown wasn't really planned. So I didn't really have time to plan the shutdown, make sure that maintenance is done, maybe use the shutdown would have been nice for some optimization measures. None of that has been possible. And I also haven't been really able to build up inventory that will help me during this, the ramp up again. I need to look at a new operating state. I cannot, if I want to have social distancing within my factory, what does it really mean? Can I do it? What does it mean for my factory layout? And also, what does it mean going forward for automation? Do I need more automation, less people to be able to space them out? Who has the money to actually invest in this? I haven't done a full, or I've gone into complete hibernation in many areas where the plant was fully shut down. There was no maintenance support or facilities care. And I have a certain amount around suppliers as well. Are my suppliers ready? Have some of them gone bankrupt? Cannot help me anymore? Are those critical for my system? What do I do? How do I replace? Do I take over their plans, send my own people? If I do that, how do I make sure that these people are safe? Right? How do I synchronize my supply chain? And clearly all of this has been over a long time frame, depending on the region in which you live, depending on the challenges, whether you were sort of in a red zone or maybe in a yellow or green zone. Production could have been stopped for 6+ weeks, right? And that's a very long time. Normally you don't have these kind of disruptions. So it's going to be very challenging to see how we build up again. So this is just, I think, just the timeline where you had high productivity, but then the corona cases came, the corona cases start sort of peaking, and then during that phase you have very low productivity, you have your emergency rooms to manage the situation, and that's typically one area where Indian companies are doing extremely well, and that's just reacting flexibly to new challenges. I think that's a strong suit of Indian businesses. I think this is also what's going to help us get through this whole crisis. And then we're moving slowly but surely into the ramp-up phase. And clearly, I think that's also very important. This ramp-up has to be done carefully. It is a very difficult balance act between ensuring that the economy runs and making sure that we don't get a second wave, right? Clearly, this whole game has been all about making sure that there is adequate capacity in hospitals to manage this crisis, right? So it's better to try to spread the impact of the crisis out as a function of time. And clearly, nobody wants to sort of manage the first wave well and then be hit down the line with a second wave, maybe during monsoon or what have you, that escalates. Monsoon is there already, but in the West, it's more the worry about winter, right? Have we gone through this and then opened up only to be hit with a double whammy of the flu and COVID in autumn? The other challenge that you have is that OEMs may sort of prioritize their ramp up differently, right? This may depend very much on every OEM. It could be driven by program profitability. I take the highest margin programs that I'm going to start pushing out the door because I need to make money. It could be high volume programs. It could be, depending on the dealer inventory level, it could be on the supplier depending on supplier readiness, the complexity of the product, and last but not least, do we want to use common production assets or not? And then I can actually look at a different cadence of ramp up. I could potentially do a region by region ramp up, start in Gujarat, for example, before I move to Delhi. I could do shift by shift, right? Bring the first shift online, or maybe plant by plant or program by program, right? So that is something that OEMs will decide for themselves, and clearly that induces a certain amount of complexity for suppliers. So the ramp up process will also depend on government, right? The role of government in this crisis has become quite clear. It's become that apparent that government and efficient government is important. So we have then clearly to contend also with a situation where, depending on what the government does, our ramp up will differ. So we may have a full-scale ramp up immediately. That's very unlikely. I don't think any government would take that risk. We may have slow regional ramp ups. Again, Maharashtra says, okay, listen, I have the situation in Bombay and in Pune under control. So let me start in those areas, whereas Chennai and Tamil Nadu is still in a red zone and will take a little longer to ramp up. So it will come somewhat later. That could be a possibility. So we'll have a gradual increase of production, then some plateau. Then the next region will open up again a plateau, and then we'll continue like that. So that would mean that the full ramp up would take about 6 to 9 months. And then there could be a selective ramp up of single programs which would lead to an even prolonged ramp up of 12 to 18 months. Now, clearly what this means is, again, it's a complex situation, it's a volatile situation, and it requires a certain amount of detailed planning, right? So we really need to see for our various functions, in case of the ramp up, what is it that I need to do under the scenarios that I believe apply to my situation, driven by OEMs, by other suppliers that I work with? What is the situation that I need to take into account? What are maybe 2 or 3 credible scenarios? And then I need to say, okay, listen, what does this mean for production and HR, for procurement, engineering, logistics, maintenance, finance, and so on and so forth? Right, so that's a very structured process that we have to go through. And I think the good news is, again, we have the capabilities, we can figure this out. This is something where we can clearly put the plans in place based on these scenarios to tackle the situation. Some help is available. We have, for example, a ramp-up list, which is a checkup list, some 200 items in that list. At least it is something that helps you get started to make sure that you manage the situation. And then beyond the immediate ramp-up, we have to start thinking about what is happening in the new normal, right? What does this mean for us? One is we definitely have an issue in terms of 2020 budgets, right? And everybody has this issue. We're not going to make our numbers. So then the question is, what can we do to salvage as much as possible? And how do we recalibrate the budget to make sure that we come as close as possible to a black zero or maybe even some profit? In the mid and long range area, we need to understand what are changing demand patterns. What has happened to the psyche of the consumer, and is this going to impact my business in the next 2, 3, maybe 4 years, right? If that is the case, what's my strategy and my operating model? How do I adjust to this environment where growth that I was used to isn't really happening, right? And I may see some amount of contraction for a prolonged period of time. Right? And I also will then have to understand what is the different regulatory environment, what's the environment as far as access to cash is concerned, and how do I manage this? And then from a strategic perspective, as I mentioned before, we will see increased consolidation. And there in that environment, I have to think about what is the implication on my existing portfolio? What's the implication on my overall competitive situation? And what are the strategic opportunities that emerge that I can potentially leverage? Right? If I am a solid supplier and I have good business practices and a good balance sheet, I may find that my role and my responsibility and my importance for OEs suddenly becomes dramatically enhanced, whether the OE is an OEM or it's a tier 1 supplier or tier 2 supplier that I work with, because they would like to have the kind of confidence and the kind of capability that I offer. So that may give me an opportunity to consolidate more volume and play a bigger role going forward. So I can come out of this crisis stronger than I went into the crisis. And that's, again, something that we've seen happening also in the context of the great financial crisis, 2008, 2009. After that crisis, two things happened. One is OEMs who previously had been very pushy towards their suppliers, and that led to a situation where over a decade, on average, suppliers didn't make the weighted average cost of capital, for example, in Europe. They realized that this is actually a joint game, and they realized that suppliers need to be able to invest as well. So they changed the business behavior to some degree, and clearly suppliers who were able to leverage the opportunity and consolidate came out stronger. In terms of how do you do that, you need to look at product line profitability in terms of cost optimization, whether it's the product costs basically or value-based product design. You need to do an end-to-end process optimization. This is never waste a good crisis. Use this crisis to drive efficiency in your organization. This could be RPA. It could be an end-to-end process efficiency lever analysis. And then you obviously have various opportunities to continue to improve performance by looking at sales, procurement, the manufacturing and supply chain, engineering efficiency, and SG&A, right? So that's basically the opportunity that's on the table, also the need of the hour. How do I, both from a strategic and an operational perspective, improve the overall performance of my organization to get through the current crisis, and then leverage the current crisis going forward. I think with that, I would like to stop. We have another 15 minutes for questions. Here's the team that put this presentation together. And if you have any questions, please, also after the webinar, please feel free to reach out. Well, I think that's it from my side.
Thank you. Thank you so much, Dr. Aulbur. Yeah, I would help you out with some of the questions. I think we've received a set of questions here in the live Q&A, and we've also received a set of interesting questions at the time of registration. Let's take the one which is on top of the Q&A list. It comes from Mr. Mohit Mehrotra, based in Bangalore. He's the MD of Omnicom India. Post-COVID, do you foresee a transformation of business models in the industry? What is your take on change in business models per se?
No, I think it's a good question. What we've seen, this is more from a passenger vehicle perspective, probably a larger focus on internet sales. There's been a discussion around, should we do it, should we not do it? How does it impact our customers? How does it impact our dealer partners? And I think that the push towards that channel is going to be higher. I think that maybe not a business model change, but operating change in businesses is likely to happen. Some of the companies, for example, Continental, have already mentioned that they're not going to go back to the new normal, but they will cut travel-based budgets going forward, and there will be much more virtual collaboration that will be enabled. So I think those kind of factors will definitely be there, and they will play a role in terms of the interaction between the OEMs and the supply chain. I mentioned already, there's going to be a significant amount of consolidation, and there's going to be, in all likeliness, a stronger focus on regionalization. I think what has happened is people have suddenly realize that for example, in pharma, they don't have access to masks. They don't have access to paracetamol. And that's obviously a major problem for countries and actually citizens. So I think that trigger and that thinking is going to lead to a situation where potentially more technology will be used to relocate some of the low-cost production into higher cost areas to make sure that there's at least enough production capacity in higher cost areas to basically secure supply, and that will not be limited only to pharma. I think that we'll see that happening in other parts of the value chain as well, right? And clearly with the US-China conflict, there are other consequences in terms of the disruption and shifting of supply chains that I would think are likely to happen.
Okay, thank you, Dr. Aulbur. The next one comes from Mr. Zubin Sarkar. Mr. Sarkar is based in Munich in Germany. He is the head of business development for electric commercial vehicles at Siemens. His question, what would be the short-term and long-term impact on electric buses, electric trucks, and electric off-highway vehicles in mining, construction, and predominantly the electric vehicle space?
No, I think that's a very good question. And I think the answer is somewhat mixed in the sense that for electric buses, the question will be who has money to buy. Right? What we're seeing now is that from a tax perspective, the local entities as well as countries are being hit severely. Obviously, if your GDP crashes, your tax income is going to go down. At the same time, you have a higher outflow because you have to support small businesses, ensure liquidity, support people that are in real dire situations because they've lost their jobs. So I think the question is, am I going to invest in electric buses right now, or is this going to be pushed back a little bit? That's probably something where I would see a certain amount of pushing, right? Where basically the timeline gets a little bit adjusted in terms of fleet expansion. In terms of investments in electrification in commercial vehicles, I don't see a major change in the sense that we have, from a regional perspective, the biggest push currently in Europe, because Europe is clearly committed to being CO2 neutral by 2050. That timeline is unlikely to be adjusted because despite the challenges that we have in COVID, fact of the matter is climate change is going to be much more challenging. The damage to the economy is going to be much graver. And as a consequence, we need to continue to push for climate change, for CO2 neutral operations. And this clearly means that those timelines won't be adjusted. It clearly means that investment will have to happen. Maybe there can be, at least what I can say is I don't see this, and talking to various OEMs, I don't see that being affected. On the off-highway side, electrification is a question of the various use cases. Electrification is somewhat limited. Most of what we've seen is really more in compact construction equipment, for example, where hybrid systems make sense in terms of recuperation of energy for wheel loaders or some of the excavators. So I think that as far as the use cases there, it will happen. The use cases in trucks are there for many of the applications by 2025, not only from a regulatory perspective, but also from a pure use case perspective, because we believe that by that time battery prices have come down enough. So I don't see an immediate impact. Where I see a little bit more impact is in autonomous technology, because there I think companies are currently thinking, okay, listen, I really haven't put all the investment money already on the table. I'm not as committed. And as a consequence, I should have an opportunity to push this back by 1 or 2 years. Whether that's the right move is a different discussion, but I think some people may just not have the option to continue to invest. And we're seeing that on the startup space as well, where VC funding is de facto more difficult to get by or to access. And clearly startups that have last raised funds 18 months ago or 24 months ago are currently potentially under pressure, because normally this is when they would go for the next round of funding. And right now it's difficult to fund and find financial support.
Okay. Here's one that's actually receiving a set of upvotes related to anti-China sentiment that you just touched about. This comes from Mr. Sriram Shivaram. He's actually the president of Madras Engineering Industries, a supplier based in India. His question is, with significant anti-China sentiment that is currently evident, what steps should Indian component manufacturers take to expand their share of European and North American demand, which will likely rebound in 2022 onwards?
Yeah, I think the Indian suppliers have made significant inroads. If I look at some of the local ecosystems, for example, if I look at Chennai, I'm just taking Bharat Benz as an example because I'm quite familiar with that example due to my work at Daimler. But the situation over there is there's been a cooperation between the OE and the suppliers, and that's led to basically both ensuring 90% localization of the vehicles as well as ensuring significant export for key suppliers in India. I think in general, the Indian supply landscape is positive. Probably more could be done on being innovative and bringing new technology to customers and to clients. It's something that clients are interested in, and probably still somewhat of a weakness for some Indian suppliers. The second point for me was always around more the infrastructure that's actually available to Indian suppliers, right? If you look at ports, a lot has happened, but I think the overall infrastructure can still further improve to make sure that we can take hassle, logistics costs, and time out of the overall shipping process, which immediately leads to lower inventories on the client side and hopefully increased sales. Right? I don't think that looking at the capabilities of the Indian supply base, I think there's a lot of capability, there's a lot of opportunity to scale, and I hope that this environment is an opportunity for India to step up and be more successful going forward. But it has to be a combination of company plus de facto government.
Right. Well, that's an encouraging thing for Indian suppliers. But as you said, I think a lot of things have to fall in place, and the entire ecosystem has to be ready for the same. Right. Here's one which is probably one of the most popular questions at the time of registration. The Indian market was facing the challenge of moving on to BS6 emission norms from April 1st, and which kind of landed right in the middle of the COVID impact and also the lockdown that was happening across the country. Once the lockdown gets lifted gradually, what kind of impact do you see COVID having on BS6, the BS6 transition in India?
I mean, let me put it this way. This is an act of God. So if I had an inventory planned with BS4 vehicles that were supposed to be sold before the end of March, and then I have a lockdown and I cannot sell these vehicles, the government needs to give me permission to sell those vehicles, right? I think the Indian businesses are burdened already in the sense that they've been asked to clearly support workers, which is the right thing to do. But I think I should not now go and in an environment where on the one hand I need to invest in technology, on the other hand my revenues are crashing, put artificial challenges on producers that are unreasonable in my opinion. Right? This is an act of God. This is not a company saying, oh, I'm going to try to cheat the system. Right? This is really a problem that came from the outside, and I need to be able to sell my vehicles. I need to be able to make the money off those vehicles. And I cannot afford to write off all the BS4 vehicles or then try to find export markets like we've done this the last time around. Right? This is not the responsibility of any one company. At least that's my submission.
Right, right. Makes sense. Yeah. So we look forward to support from the government to actually help us tide over this crisis. Right.
Yeah.
There's one related to dealerships. That's a slightly different perspective to what we've been discussing predominantly in the presentation. What impact do you see the dealerships, the vehicle dealerships, taking as a result of COVID? I mean, one of the attendees feels customers might hesitate in actually visiting the workshops for service and even purchase of vehicles. Your take on impact on dealerships?
No, again, I think there's going to be a time where people will be hesitant to go back to normal life, right? So buying a vehicle, if I don't have to do it, my vehicle is still running fine, I'm just going to stay at home, right? I'm going to wait for 6, maybe 12 months. If I have, say, normally I think average time was about 4 years in India to change a car, I can drive my vehicle for 5, right? By the time there'll be a vaccine, and as a consequence, hopefully my whole experience will be an experience that's less filled with anxiety. That is something that will play on the mind of some consumers, not actually every consumer, but enough consumers to potentially depress demand for some time. That's one thing. In the commercial vehicle space, I think it's a little different in the sense that at the end of the day, this is a business. So as soon as the economy it's open again, we need to invest, or we need to basically go and go back to business. However, we need to find a way to do that in an as safe manner as possible. But there, obviously, my TCO at some point will increase, at least for larger fleets. They will have to invest in equipment and buy equipment. They'll push it out as much as they can, but at some point, maintenance cost is going to force you to switch.
Okay. Mr. Tarun Chabra asks, what do you think could be the growth drivers post-COVID? There's also this popular discussion on the scrappage policy and other policy changes by the government, and also probably expectation of a stimulus package. What do you think could drive growth for our industry, which will also reflect to the economy?
No, I think, scrappage could be an important driver. What is being discussed in many countries is basically approach towards eco-friendly incentives, meaning incentives that help us achieve CO2 emission guidelines and norms and Paris Accord agreements. I think that could potentially make sense. The question is, how much money does the government have? How much money can the government actually afford to invest? Another important component is really, how do I find ways to operate in a safe environment? I think the fear factor for many is relatively high. This has been somewhat disconcerting experience in the sense that the kind of problems that this virus causes are manifold. The worry is that I won't have access to decent healthcare, decent hospitals, right? And even if I'm extremely well off, then I can go into the best private hospitals that are available in, say, in India. The problem that I'll have if there's a run on the hospitals is I'm not going to get a space. So these are anxieties that are real, and I think finding ways to handle those anxieties and help companies come up with safe operating procedures is another important part of going back to normal life and reigniting consumer confidence. Because I think a lot of it is really making sure that consumers are confident in 2 factors. One is I'm safe, and the second is there is an economic future for me. Right? If we look at the US, 30 million unemployed, it's going to take some time to bring them back into the working fold. This is not going to happen overnight. And as long as that is out there and unemployment is high, will people really be as happy to spend as they were in the past? I doubt it. Right? So incentives will help. Incentives will help. But then again, how much money can the government give you for you to go out and happily and freely spend again? Right? I mean, governments also have limits. Yes, they can print money, but I think it's a combination of stimulus and confidence.
Yeah, that sounds like a balanced view, because and it's very important to change sentiments, make them more positive, and I think that can be a great growth driver as well. Right. Another aspect that is a concern right now: what impact would COVID have on exports, both on vehicle exports and also component exports? Now that borders might become a lot tighter, country borders.
I think that basically exports will be affected for, let me put it this way. I think if I look at China, for example, it's not necessarily the capability of not getting product into the West, for example, but it's more that the supply markets have collapsed, right? So previously you had a demand shock in the sense that suppliers weren't producing. Now you have a supply shock in the sense that people are not buying. I think that's probably more of an issue. As far as exports are concerned for India, I do think, as I said before, there's going to be some recalibration in terms of what needs to be produced there and what sort of the safety production that I want to have close to my shores, meaning within my region. In the Indian automotive space, I'm not sure if that would have a major impact, so I wouldn't see major hurdles to Indian exports going forward. I think China would be much more of an issue, because while China is trying aggressively to portray itself as the model for solving this crisis, people probably are quite aware of what happened, where it came from, and what the communication policy was. And I think that has led to a certain amount of disillusionment with China across the board.
Okay, right. One question which we discussed before the webinar when we had a chat is related to MSMEs. This comes from Mr. Vilas Balang from Rotex Automation. What is your single most important advice to MSME suppliers to recover from this current situation? I think this is a major concern for a number of players in India right now.
I mean, see, as I mentioned before, you have a number of measures that you can pull. One measure is definitely making sure that liquidity is available. Hopefully, you ran your businesses in an effective, transparent manner, so banks can trust your balance sheets, and they're hopefully then willing to give you loans. But hopefully you're not over indebted, right? So there's been a tendency in the past for some companies to go into lots and lots of debt in the quest to become larger and larger, and some may have overextended. Now, if you're overextended and then you're hit with this kind of crisis, that's obviously not a good combination, and that may lead to you not being able to run the company anymore. Right? If that is not the case, I think it's really a question of making sure you have liquidity, your people are safe, you start preparing for the ramp up, and you look for options of growth, right? In your environment, you may be able to consolidate several other smaller companies, become more significant yourself. You may be able to position yourself as a much more important partner to your customers in this environment. I think that's where there is a significant amount of opportunity, but you would have had to do your homework going into the crisis already. Right? That doesn't mean that somebody can't be hit and caught on the wrong foot with this crisis. I think that's possible. You could have had the best projections, made them in October when nobody was talking about COVID, and then you get hit and you've sort of gone into debt, you've made some commitments that you can't keep. That is feasible. But I think if you haven't managed carefully enough, this crisis is going to be a real massive challenge.
Right. I hope we can take a couple of more questions, Dr. Aulbur. We have
perfectly fine. Yeah.
Okay. One comes from our friend in the UK, Jim Gibbons. What technologies do you think would lead the revival to further change in the sector post-COVID? So from a technology perspective for commercial vehicles, what do you think will actually play a difference?
Yeah, I think that electrification is going to remain important. I mean, we've looked at electrification from TCO perspective. We see lots of applications where electrification makes sense. By 2025 in Europe, we see quite a few in the United States, and China anyway is more, state-driven than anything else. So electrification is going to be the immediate thing that's going to come. And after that, we do believe that L4 autonomous driving has a clear business case, especially on some long-distance routes in the United States on the I-10 corridor. So that's going to be a major driver in the commercial vehicle industry. And I think it's also a driver that may have some impact on the business models that we see, because long-distance transport could really move towards an intermodal kind of application, right? Where you have, if you're working with transfer hubs, you have somebody bringing the container to the transfer hub, and then somebody takes the trailer from A to B over a 1,000-mile journey, right? So that, I think those two factors are really important. Connected is going to be an ongoing area of relevance as we sort of integrate the logistics value chain more and more. We will see basically new concepts in last mile distribution. If you look at the density of Amazon vans that are currently running around in most of the major cities, this density is going to increase so much that it actually clogs traffic. So basically we need to find new solutions, and these solutions could be then around ultra mobility, urban mobility vehicles, UMVs that are sort of larger, significantly larger vans, or it could be around a concept that's similar to the 40-foot or 20-foot container concept that we have in long-distance transport and maritime transport. And here we could think about having smaller sort of units that are stackable and can be transported in a urban mobility vehicle as well as on a three-wheeler, right? So I think those are the kind of solutions that we would see where technology is going to continue to drive trucking forward.
Right. Okay. I just take a couple of last questions now. One comes related to the trailer space, but it's focused on fleet operators. Are we going to see a shift in line of business for commercial fleet operators? What kind of impact and what kind of preparedness do the fleet operators need to have?
I think the fleet operators are obviously sort of different types of fleet operators. They're basically the smaller fleet operators that end up often working for larger fleet operators and taking contracts. Those will be hit because clearly the large operators will keep whatever business they can get within themselves. They also will be hit because typically their financial capabilities are not as big as the financial capabilities of the larger companies. The larger companies will obviously survive, but will also, as we discussed earlier, most likely push back purchases as long as they can, because adding capex at this point in time is something that you do only if it's absolutely necessary. Still a volatile environment. We don't know when demand is going to come back. So you would try to push this out as much as possible, keep liquidity as much as possible to tide over the current disruption.
Okay, right. The last one is a pretty straightforward one, might not have a straightforward answer though. Which geographical region across the globe do you think would benefit most out of this situation? From an automotive perspective, of course.
No, it's a very good question. I mean, very hard to say. I think quite frankly, to be honest, I haven't really thought about it this way. I've thought more in terms of regionalization. Regionalization would mean that obviously some work is going to come back to either North America or Europe, so that's going to be beneficial for jobs. It may not be beneficial for China. India is probably a balancing act between this tendency and hopefully then getting production business from China. Yeah, I think that's roughly where it is. It's the main factor that we're seeing is basically regionalization that's probably going to be more pronounced. And obviously, as you regionalize, you lose economies of scale, you lose access to comparative advantages, be it labor cost or others. And that will lead to a situation where probably cost is going to increase to a certain amount for consumers, choice may decrease. And I think also the propagation of technology is not going to be as rapid as it was previously. Right? That's what my current thought is. Obviously, I'm unable to predict the future. But if you look at this crisis, and you probably have to take into account that this is not the last pandemic that we're living through, right? And you have to take into account that climate change is going to add significant uncertainty in the global environment. I think that this regionalization is going to be quite a strong trend with the consequences that I just mentioned. Who's going to win in the end? I think that China would probably lose somewhat. Other regions may win a little bit. Is it going to be a massive transformation at this point in time? I don't think so. China also, if you look at the overall economy, has transformed its economy. The relevance of exports for China has also come down dramatically. Right, the country has become more inward focused, more internal consumption focused. So I think it won't be a dramatic change. It will be more a continuous shift, is what I'm thinking.
Right. Okay. Thank you so much, Dr. Aulbur. I think we will wrap up proceedings. There are many other questions, pertaining to specific segments like off-highway and a few other segments. I also found a set of questions requesting for what kind of support Roland Berger can actually extend. I would request attendees interested to probably get in touch with Dr. Aulbur or anybody else on the screen from the team, and they'll be happy to help you out, support as well. Yeah.
Exactly, and if there any other questions, please feel, the contact data is there. Just feel free to reach out. We're happy to engage.
Sure. Yeah. So we thank our attendees. Thanks a lot to all of them. It was a very, very insightful presentation and a Q&A session. We hope you found it informative and purposeful, especially during these testing times for our industry. We once again extend our heartfelt thanks to Dr. Aulbur for his time and also for sharing his valuable insights as we try to overcome this pandemic as one team together. The speaker presentation would be made available on our Motor India website by tomorrow, and the webinar recording will also be up on our YouTube channel and for future viewing. So we thank all of you once again, and we hope to see you in our next webinars as part of our Combating Crisis webinar series. So wherever you are, take care, stay safe. Thank you once again. Thank you, Dr. Aulbur. Thank you so much. Bye-bye.
Thanks a ton. Take care. Bye.
Bye. Yeah.
Bye.